Hello, how I started a swing trade setup using trend line. We are going to take a look at our uh, watch list here, and let's start from the, we are going to analyze those three, but let's start from the bottom up. So those two that I highlighted are the one that I purchased and I have not sold it, and we can see how, I start the setup and took the trade or enter the trade. So the first one we are going to analyze is MAR. We are using Think of Swim platform and we are going to use maximum daily chart. So MAR, put arrows on the chart to show where a purchaser. Those will be arrows facing upward, and where are sold are arrows facing downward. We have the date on the x-axis from the past to the present, and the price on the y-axis from 0 up. So we have 2025 here. That is the dotted line for the year, and I have an arrow right there, and let's zoom in. So we have an arrow there. I put a small uptrend line there as well. So when the price pulled back to this support line, went up, pulled back a little bit, and went up and reached a new high, it was done. When it pulled back to this support line and start going up from there, that's when we enter the trade. So I waited to see a few higher lows, and it seems like I make the purchase on a day that it went down. So I usually like to buy on the day that it went up. That is a green bar, but maybe by the time I will purchase it around midday, by the time the market close, it could change color. So we can see that red bar is higher than this one, which is higher than this one. So we have about 2 higher lows there, or 3, depending on which one you are counting. But I will say we have 2 higher lows, and then I made that purchase. But technically I could just have seen 1 higher low because I was purchasing on a second green bar day, but that day end up being a red one by the end of the day. So I saw 1 higher low and I made the purchase because for me it was low enough, but it was not done because it pulled back, went up, pulled back to below that trend line a little bit before it start going up. So, and we are using daily chart, so therefore every single candlestick is a day time frame, and any bar that will be below the bar that I purchased, I will have been negative in that trade. So we purchased it there, and that is where the arrow is. So you can see that by purchasing it there was this time frame. It could well be we purchased it around March, 1 month time frame. For the majority of 1 month we are below, it went down. We don't like to set a stop loss, therefore we just left it in the account, and then it started going up. So it went up but went more sideways for a while, tried to come back down, and then start going up from there. Today is November 14, 2025, but the market has not opened yet. And yesterday the market closed on red, meaning the price at the end of the day was lower than the price in the morning when the market opened. But you can see that it is on its way up, and we bought it there, and our entry, pretty much our entry point is around this support line or valley line. After we see few higher lows, maybe an indication that maybe it's done going down. I say maybe because it could turn around and continue going down like the way it did it. We purchase it, and our exit point is after a new high. Because we are using a maximum daily chart, a new high will be all-time high. So that means when the price exceeds this price here, we'll start thinking about if we want to sell it or stay in the trade a little longer. But that is how we started a setup, a swing trade setup, and then enter the trade. So our long option and swing trading strategy consists of waiting for the stocks to pull back to the valid support line, or the support line passing by the valley of the mountain. And I like to call those swings mountain and valley. When it pulls back to the valley and start going up, we will buy some shares and just keep it until it reach a new high exceeding the previous peak, and we can exit or start thinking if we want to stay in the trade. Half of the time is going to continue claiming higher peak, or set a price target to sell it at. Sometimes some of those stocks, they do not meet all the other two criteria. So by default, buying it at the valley and selling it at the new high. But sometimes when it reaches a new high, it could continue climbing up higher and higher, of course pulling back and continue. And instead of getting up right away, we like to see if we can stay in the trade a little bit longer, because we know that by the time it will come back to the valley line, it might take a while. Therefore, we like to see if we can stay in the trade a little bit longer before we get out. And we are still working on it to see how long we can stay safely in the trade without overstaying. And that is a skill we need to continue practicing and strengthen it out. And by using the same stocks, trading the same stocks over and over and over, my goal is to get to understand those patterns that those stocks display on their chart, because every single stock has unique chart, and I like to just have a watch list of those stocks that I'll just keep trading from during the year, so that I can keep analyzing those chart. And because every day a new candlestick will be added to the previous one if you are using daily chart, therefore one piece of the puzzle will be added to the existing puzzle pieces, and helping you to try to see if you can decipher the message the chart is trying to share. So the next one we are going to analyze is MANH. Okay, so MANH, we purchase it when it pull back. You can see the new high there. When it pull back to the valley line, we purchase it there. There is an arrow there, but it pulled back below it, went up, pulled back to it, and went up. So at this point, we will barely be positive in it because we purchased it here. So it could well came back to about where we purchased it. So we enter it around March, and we are in November. It's still around that support line. So there is still a time for somebody that will want to buy it, but because it's downtrending, it's not the time to buy. So let's get closer. Yesterday the price went up, but you can see that those pieces of the puzzle is going sideways there. So we purchased it there after we saw again one higher low, and we purchase it right at the support line there, but then it went up a little bit and pulled back and then went up. So let's get, frankly, I didn't think it's going to come back down low here again after so many months that it touched base with it. So we are going to put our mouths where we purchase it, but you can see that we have a little bit of profit there where it is right now. We are just going to continue holding on it because we bought it at the valley line, and right now it's still around that price there because it went below the support line. We are going to hold on to it and then wait on it. So that is how we got in it. You can see this example. We are profitable. Maybe after a year around this area we are negative, and then it start going down here, but we are going to wait on it. That is why we like to wait to buy it at the valley line, and this is a long valley line. We can go to maximum monthly chart to see if you can see it. So in fact we have this valley line and we have this one as well. So there is a possibility it might try to come back down to this. It just has not touched base with it in a while. But again, the thing is, big investors, they purchase those shares for their funds, and after a while or some years, they might try to balance their account and liquidate or sell some stocks, to balance their fund. I don't know how they do that, but that is just the way I'm interpreting it. So by doing that, they will sell a lot of shares, which will drop the price. When you have a lot of offer, the price will go down because there is more offer than demand. So that will drop the price, and it's like a circle type thing. So they are purchasing it, adding it to their fund, and for a while they want to balance the fund based on the proportion of each stocks they have in their portfolio. They might sell some excess of some stock, which will drop the price, and for a while, and then it will start going back again when some start buying. So that is pretty much in some way what is going on in the background. But I don't like to think about that. I just like to view it as a circle. Start at that valley line, went to the peak, will come back to that valley line. It could take a year or 2 or 3 depending on the stock. So we bought it at that valley line. You can see that mountain. It start going up from there, but pull back. We are just going to continue observing it. If it's going to come back down to this valley line, or if it's going to rest there for a while and leave. We can see that we have a little bit of that going on here. When it pulled back to this valley line, it went up, it pulled back to it before it was ready to go up. And you can see that when it exceeded this peak in a year and a half or so, but then continue going higher for another a year and a half. That's why we do not want to sell it too quickly and lose a year and a half profit, when we know that it's going to take a year and a half and more, almost 2 years, before we can find an entry point again. So that is the setup or the strategy we are using, and keep tweaking it, keep improving that strategy so that we can master it. So we pretty much like to buy it at the valley line when they start going up, and sell it around the peak. After the first peak is reached, sell it around the peak, and then wait to buy it again at the valley line. So determining which support line is the valley line is the key to find a good entry point. so that you do not pay a higher price for it. But if you end up missing that value line and you end up buying it at a support line that is more like a upside wall of the mountain, supporting the upside wall of the mountain, or a short-term value line, then if you are swing trading a good stock, you know that you can just keep it in your portfolio for a while. It will come back up. That's why we tend to swing trade upward stock or growth stock, because we want to buy at a higher lows value line and sell it at a higher peak. So we want to see higher value line that is uptrending and have a higher peak as well. At the peak of the mountain will continue to be higher and higher and higher, showing growth on both sides. The value line is growing, the peak is growing as well. It is a good stock to swing trade and determine where to buy and where to sell before you enter the trade. Have a good idea is a good strategy as well. One more we are going to analyze is MA. And at the end we can see, since we have not sold those two yet, we can see how much we pay for them if you pay attention to how much it was selling. So MA, we have not found an entry point yet. We tend to color code where we want to buy the value line so that it is obvious compared to the other lines we have. Right now is resting on this support line, which originated from there and seems to be going up from there as well. So it seems it could well not be done claiming a higher mountain yet, but we just don't know when it's going to be done. Therefore, we don't want to enter the trade on the support line supporting the upside wall of the mountain that it is claiming. Yesterday the price went down, but we want to buy at the value line and it's still far from where we want to buy. Therefore, we are not going to make any purchase. So this concludes how we spot a swing trade setup using trend lines. If we come back to in fact, it seems like we purchased MA in 2024 and sold it this year. Let's take a look at it again. Yes, we did. So we purchased it around this support line in 2024 because we were trading using short option and swing trading strategy and traded around this support line, just like the way we did it around this one. And we bought it again there. It went up a little bit and pulled back, and we sold it in 2025. This is the end of 2024 and the beginning of 2025. So we can go to our record spreadsheet, and we have MA. We bought it in December at 522. We sold it in January, probably a little bit over a month later, for 542. About $40 profit a share. Is it? 522 and 542. You will think it will be, oh yeah, it will be $20, about $20 profit a share. So we made about 222 total profits. We pay 26 cents fee, and we have about 3% of return, or $90 profit per share. So MANH, we purchased it in March for 173, and we have not sold it yet. MAR, we purchased it in March for 244, and we have not sold it yet. So those are the three that we analyzed today. Thank you so much for your time. Thank you for your comments, and thank you very much for watching our videos. Thank you very much for subscribing to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel and ninasoup.com our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small and grow your account from there. Thank you. For more of our swing trading strategy, will you please check the playlist in the description of this video. And this video is brought to you by our online store, liberlabel.com. We have a tote bag that we listed, and if you are interested in a bag, in a tote bag, will you please check it out? Or if you are looking for a gift for a family member, a friend, or yourself, will you please check it out? Thank you for your time.